You must have heard the saying that you shouldn't put all your eggs in one basket. And the reason is this. Yes, if the basket falls or breaks for one reason or another, you will lose all your eggs. Wala nang pang almusal. Hi, this is Ronnie Ordoña. That basket of eggs will be the central theme of our discussion today. It is called diversification. It is a strategy under risk management for spreading one's investments so that their exposure to risks will be limited. When you diversify your portfolio, it will protect you from big losses. And not only that, it is more likely to give you higher returns and lower risk. So, it is a very important part of trading and investing. I'll show you just how this is actually done in practice. So let's go. In 2008, Pepsi Philippines had its IPO or initial public offering at 3 pesos and 50 centavos per share. Its plan was to increase its market share in the Philippines and introduce more products like some non-carbonated drinks. It also has very little debts or utang, no? So marami siyang cash, marami siyang pera. So the prospect for buying Pepsi at this time was very good. Kaya if you put all your investing money in Pepsi because of these beautiful projections, no one can blame you. However, in 2020, Pepsi announced it is delisting from PSE, meaning it was pulling out of the public market. Maybe because business was not good and the projections did not materialize. This means they will be buying all stocks in the market at the specified price of 1 peso and 70 centavos per share. This means that if you bought Pepsi at 350 and held it till the listing time, you would absorb a loss of 51%. Well, this is a clear example of not putting all your eggs in one basket. And by the way, it was not only Pepsi that delisted. You have many more, as you can see on your screen. Exim Bank, MCP, Gotesco, Mars Steel, PNOC, etc. Those were big companies. But big as they were, that was no guarantee your money was safe in them. Again, if you had put your investing money in one of them, yung mga pangarap mo ay magmumukhang parang bulang mawawala. So, the clear lesson is don't put all your eggs in one basket. You need to diversify. But diversification is not all about buying many stocks. Let's go to the next slide to see that lesson. Let us say you did not buy just one stock. You bought several, say 4. You could still be at big risk. These stocks, Ayala Land Inc., Mega World, Phil Invest, and Double Dragon are 4 of the biggest companies in the property sector of the Philippine market. They are stable and profitable, and they are owned and operated by experienced captains of the industry. From the first week of February to first week of August this year, their prices all fell big time. See how they fell over that period. If by chance all your investing money were in those 4 stocks during that period, bad luck. Sayang kasi lahat sila bagsak talaga. How will you feel watching them fall one by one? Good if you have the patience to wait for the downtrend to end and recover. But what if that will last for many years? You would have lost the potential income for those lost years from other but better performing stocks. So, masakit yan. Losing 37%, 31%, 18%, and 27% will give you many sleepless nights. This is a good example of putting all your eggs in one basket. Other property stocks were also falling that time, like Robinsons, RLC, Villar's BLL, and CPG, Century Properties. And in this case, now our basket is the property sector. So to protect your money, we need to diversify. We need to buy stocks that are uncorrelated, as shown. While the real estate sector was falling, one stock in mining, the semi-rare SCC, was rising. This is an example of diversification. So, if you have so much investing money, here is how you may diversify. Spread your investments. You can diversify first by sector. Let's look into this with some details. Under sector are holding firms that include AC and SM. They are also called conglomerates. Still under sector are those into industrial operation like Jollibee and Aboitiz Power. Another under sector is called property. Ayala Land belongs to this. Still falling under the sector is services. Example, Apollo Global Capital and All Day Supermarket. You can also diversify according to how big the company is, as measured in terms of market capitalization. SM is huge with market cap of more than 1 trillion pesos, well above the 500 billion mark. MER has 367 billion market capitalization, while Pure Gold is at 103 billion pesos. Or you can also diversify by industry to which the stock belongs, like energy. ASEN is an example of this. Media is another classification. ABS-CBN and GMA7 are the examples here. Under transport, we have to go. And under retail, we have home and RRHI. Or another way of diversifying is by how old the company is. BPI, SMC, and AC are more than 100 years old. And people want them because they are confident these stocks will still be around in the next 100 years. So the retirement money that they put in them would be safe. Others, like younger companies, even startup companies, or those that are just beginning their businesses. Investors buy them because they believe that they can grow faster than the bigger companies. Some startups, including ASEN, SPNEC, and ASLAG, are all into renewable energy. ASLAG has had its IPO just last June 2022 and is a promising solar company. So, there you have it. And as you can see, there are many ways you can diversify to protect your investing money. Let us now see examples of stock portfolios containing various allocation of stocks. Here is a portfolio of stocks that represents different sectors of the market. SMC is a holding company, URC is industrial, BPI in financial, Philinvest in real estate, ABS-CBN in services, and Nickel in mining. You may assign the percentage weight of each stock according to your own preference. But a better way would be to use the returns and the risks of each stock as your criteria. This portfolio is diversified according to market capitalization. MER or Meralco is big at 367 billion pesos. JFC or Jollibee, 253 billion pesos. SM is the biggest at over 1 trillion pesos. IMI, 16.5 billion, and M-Wide, 9.1 billion pesos. Also, this portfolio contains stocks from different industries, like electricity generation and distribution for Meralco, manufacturing for IMI, food retailing, Jollibee, etc. This has an allocation of about 10% to 30% per stock. This portfolio is diversified according to industry. BDO is, of course, into banking. ASEN is in renewable energy. All D is in retailing, supermarket. To go is in logistics and transportation. And of course, Bell Corporation or BEL is into casino. This portfolio is composed of stocks that are old and new. BPI and SMC, like I said earlier, are over 100 years old. Jollibee is less than 50 years old. Raslag or Aslag, the renewable solar stock, is 5 years old. And Dito, the third Philippine telco, is about 20 years old. This portfolio is designed for stability from the big stocks and growth from the younger ones. I guess we have seen enough examples of diversification by now. Your portfolio, however, needs to be rebalanced every now and then, say every 6 months or every year, as the case may be. This is because the weights of your allocation, they change as the value of stocks change. Some might have grown big and you may need to sell some to take profit, and others may not perform as you expected them to do. So you'd want to replace them with other stocks. So in summary, to rebalance, first review your ideal mix of stocks. Then you check your current mix of status. And third, sell those exceeding your weight allocation. And lastly, buy more of those that you need to maintain the balanced portfolio. So that's it, friends. If you like to learn more about trading and investing in the stock market, you may attend my one-on-one webinar. It is free. Mag-PM ka lang para sa schedule mo. If you learned from this video, please like, leave a comment, and share it to your friends and family. They might learn as well. Now, I'll see you soon in my coming videos. Thank you very much.